Okay, we're going to get started. Again, thank you all for attending today. I just wanted you to know that today's session is being recorded for future reference. So, thank
you. Hey, welcome, everybody. Thank you for coming today. We're very excited. We haven't been doing a lot of things in person lately, but this is a big event for us, and we want to thank everybody. It is interactive, okay? I would like to get feedback from all of you. Your own experiences. You probably have different levels of experiences, different kinds of businesses, but if we make it very interactive as I go along, that would be good, even though we're recording, okay? So if you're shy about it and you don't want to be recorded, then, hold back. But if you're not worried about being on a recording, please give us your feedback, your questions, and everything. I'm Al Grillo. I'm a CPA. Here on Staten Island. I have a practice. And I'm telling you this because it's relevant, I think, to discuss. I spent a couple of years in public accounting after getting my accounting degree, and I didn't like public accounting. I didn't like being an auditor. I liked being an accountant, but I didn't like being an auditor. So I went into the corporate world, and I started doing financial reporting, and I liked that. But then I was asked to get into tax. One of the companies I was working with had a project. They said, you have to go down to Texas and was getting rid of a business, try to make some accounting records. I had no idea. We had a man buying and he would sell assets, record the cash, and then he would pay bills and record it. And I had to make a set of books out of that. So I did a pretty good job. They said, why don't you try doing corporate tax return, which I did. And I decided I really like doing tax work. So I spent the next maybe 45 years doing corporate tax work for very large companies. I worked for AT&T. I worked for what used to be known as Brooklyn Union Gas. And I spent almost the last 19 years of my career with Con Edison. And I retired in 2017. So I've been retired for 6 years from there. But I've kept working. All those years, while I was working in the corporate world, I was a small business person. I was doing tax returns on the side, and that's a business, okay? And that's why I'm bringing this up. I faced many of the things that you're facing. I'm going to talk about my experiences because things changed over these 40, 45 years, almost 50 years. Things have changed in the business world for me. The technology is the big thing, but I think it's going to be relevant to what we talk about today, okay? And that's why I'm bringing this up, not to talk about myself, but just my own experiences may be relevant to your experience. Okay, so since I retired, I've been a CPA. I do tax returns. I do a lot of sales tax consulting for other CPAs. So I'm trying to do less and less as I get older and older. But I've joined SCORE. John invited me to join about 6 years ago. It's a wonderful organization. We really like helping people. What I like to do is go out and talk to other groups and try and get people to join and to use us as a resource. Okay, so that's why we're here today. I want to start, I'm going to follow the outline, which I think you've all got. And first thing is we're going to talk about the myths of being your own boss, owning your own business. And they're kind of maybe simple, but a lot of people think once you work for yourself that you don't have a boss and you can do whatever you want. And if any of you have had any business, you know that's not the case. Because you've got clients, you've got customers, you've got demands coming from every which way. It's hard owning your own business. Okay, has anybody found that it's easy owning their own business? Okay. So you've got a lot of things you have to worry about, depending on the type of business, your competition, who are you competing with? I found as a CPA doing tax returns, my competition wasn't other accountants. It's people doing their own tax returns as technology came along and they hear, oh, do your own tax returns, see the ads on TV. Okay, that was, I think, my competition. Okay, is it really? Not really, because then people do it, they figure out this isn't worth the bother, and they go to an accountant. But that's what we perceived it to be. Okay, so you may have all other kinds of competition, and it may be real or it may be imagined, but you still have to face up to it. Okay, your product, is it a unique product? Does anybody else sell that product, provide that service? Okay. You get to do whatever you want whenever you want. You know, that's a myth, right? It's hard. It's hard work. And as the business grows, it gets even harder because at some time you may have to hire people. Okay, that is a real headache. And that's a big, big step. Has anybody had to hire anybody? You had. Tell us about it. A lot of work?
Well, in my situation, it was fairly easy.
Okay.
Because I had my mom and dad
Okay.
help me, and I only hired like a couple of people because I would be there from 6 in the morning till 10 at night.
Okay.
I did most of the time.
Okay. But when you get into payroll tax filings and things like that, it gets complicated.
Yes.
Okay, if you're paying them.
Right.
Okay. If you've got them on the payroll. When you start out, depending on the type of business that you're going to do, how are you going to do it? Are you going to work at a storefront? Are you going to work out of your house? Are you going to do it online? Those are the other big decisions you've got to make. Again, it depends on the product or service that you're offering. Okay? And then also, a lot of this depends on your background and what you're interested in doing. And I know, like, we get a lot at SCORE, we get a lot of people are interested in going into the restaurant or food service type business. And that's a tough one because you've got a lot of regulations, health-wise. Okay? And we try to guide people along, but you've got a lot of risk there. You've got risk in that, one, you can make somebody sick if you don't prepare the food properly. Number two, you've got a lot of perishable items as far as inventory. You've got refrigeration. And probably one of the worst risks that you have is inspectors coming around at the worst time. Imagine owning a restaurant and an inspector shows up on a Saturday night and starts wanting to do, let me look at your inventory and let me go through your kitchen. I was at a business group, part of the chamber actually, a few weeks ago, and they were telling me these nightmare stories. It's tough. It's really tough out there. Has anyone experienced anything like that, where you've had a city or somebody or an inspector come and want to know what's going on? Okay, that's a possibility, especially in the food business. And we get, again, a lot of requests for people who want to go into the food business. There's these other myths that we hear about. Businesses fail. Most businesses fail in the first year. Most businesses fail in the second year. That's not true. Most of them make it through those next few years. As you can see, 76% are moving along. As we get older, then we have more failures. Why is it? Because you're growing. There might be more competition. You need more financing. There's a lot of reasons why an established business can fail. And that's where you really need help. Once you got it up and going and you're doing okay, then you've got to get a lot of help. Okay? Okay, so you've got after 5 years, if you've gone this far and you're successful, you're doing pretty well. So what makes a business successful? And we'll go through this list. Choice of time and location. Time. If you started a business within the last 3 years with the pandemic, you would have never expected it. It could have been a really, really tough time. Okay. It also could have been a good opportunity. You don't know this. Okay. What is the national economy like? Okay. What is the unemployment situation? Is it hard to get employees? Where do you work? Is it in an area where you can move goods easily? I was talking to Gina, we talk about people trying to make deliveries in Manhattan. What a nightmare that can be. Okay? On a place like Staten Island, the traffic here is really tough. Okay? But those are the kinds of things you have to deal with. Adequate capital. Okay? before you go into business, and as a CPA, I understand this pretty well, you need to know how much money is your business going to require to, say, get you through that first year. Okay? Now, it's not only the business, you have to live. So do you have enough funds to get you through that first year? If you're not making, assuming you're going to break even, if you break even, well, that's good, but you haven't made any money unless you've paid yourself a salary. Okay? So if you leave a secure job where you're paying, where you're getting healthcare benefits, that's a biggie. Okay? Are you able to exist? Is it possible you have a spouse that can support you and provide the healthcare benefits for the family? Okay? This is a big one. If you're doing it mid-career where you've saved a lot, well, then maybe you could swing it. But if you're young and you don't have the savings and you don't have anyone to help you out, it's going to be tough. Okay? I remember when I was very young, as a CPA, I was working in the corporate world, which I liked, and I said to myself, should I go off on my own and open my own practice? And I started to think about it. And the first thing that popped into my mind was healthcare. I'll have to pay for my own healthcare. And that could be really expensive. I mean, I'm talking like over 40 years ago. And it could have been, if I had to pay $500 a month for it, I could have been $6,000 in the hole before I opened the door. And then I would have had to rent an office. And that's even before I got clients. And I decided, I don't think it's worth it. I would rather go on with the security of a corporate job, and do tax returns on the side. Okay? So adequate capital is a tough one. You've got to know that you're going to be able to survive for that, at least that first year. Okay? And when I talk about capital, like, again, I don't mean going out and borrowing the money. It's money that you have saved up that can get you through that first year. Okay? Later, when the business expands and you want to purchase more inventory and items like that, get more office space, then you go to a bank. Okay? But this is the initial capital to get you through. That's very, very important. Another thing that I want to talk about is the way we figure this out is do a cash flow projection. Okay? And when people come to us at SCORE, this is one of the things we ask them to do. Lay out all your expenses. Okay? What is it going to cost to go into business? Well, I need an office somewhere. I got to pay for some health insurance. Okay? I have to get office supplies. I need internet. I need a telephone. Okay? I may need office insurance if somebody comes and trips and falls. Okay? Lay out all of those things cash flow wise. What is your expected revenue? And then see how it lays out. And if it works for you, great. But it's things like that. Again, going back to this capital, many businesses fail because they don't have the adequate capital. They are underfunded. And even though they start to do well, they can't continue because there's not enough money to live on. Okay, so I want to stress that. It's very important when you're in this initial stage of thinking about it. The ability to manage and multitask. You've got to do a lot of things as a business owner, okay? Depending on what you do, you have to sell, you have to purchase, okay? You have to manage possibly employees, you have to do marketing. And things have gotten to a point with social media and things like that, where there's all kinds of new ways of doing things, okay? I myself wouldn't know where to start nowadays. Okay, you can't put an ad, just put an ad in the newspaper. You've got to be very flexible. Are any of you really good with social media? How do you go about using that in your business?
Well, I block out time where I plan and organize and create the image and idea based off of what I have going on, say for the week or for the month. Mm-hmm. And then I block out time. I have an intern who will schedule it for me, or I do it myself on the platforms that I'm using, and schedule it for the times that I believe from the data is appropriate to post the information. But it is time consuming.
Mhm.
And if you're not into social media, it's best to hire someone or, like I said, get an intern. Even my daughter, she's an influencer, so she can help when I need her. But it can get time consuming, especially when there's so much out there you see, and you always think that you're doing something wrong. You got to do something else. But I always say, just keep it simple and grow as you go.
Mhm.
You know, if you just make a simple post, don't, you know what I'm saying, like it's just an image of your business but always leave a description or a comment under it to tell the people who's watching, who's reading it, what this post is about. Don't just put an image up. Don't just put motivation. Put something about what it is that you're posting, because you want people to engage. You want people to, you know, even ask questions, DM you, and have the time to respond back. Because that's another thing. People post something, but they don't have the time to respond back. Or they don't know how to respond back because it freaks them out. Like, oh, somebody actually inquired. Like, I didn't believe somebody's going to do that.
Right.
So you got to make time to organize it, time to schedule it, and time to respond to people. Because if you don't respond to people and they're looking for what you have, they're going to go to the next person. Social
Thank you.
media is a job itself.
It's a tough one, yeah. For an older person like me, I don't know if I would be able, if I had to use it, I would have to go to someone who was really good at this. If I was even aware that I needed to do it, that's the other issue. I wouldn't even know if I had to do it. I've used LinkedIn, which is kind of something, a social media one, only to keep in touch with people. And that's been helpful. But that's about it.
But with social media, it's a way to grow your network and build relationships. So once you start building relationships, you have to nurture those relationships.
Gotcha. Thank you. So again, that's part of the multitasking, the experience in the field, okay? I was a CPA, so doing tax returns was pretty easy for me. It was something I was good at and I knew. But I've heard of people trying to get into areas that they don't know anything about. I know there's firms that will set you up in a franchise to do taxes. People who've never done a tax return are buying a business where they're going to have to do tax returns. That's a successful the roadmap for failure. You got to know your business, okay? Because the other thing is, if you hire someone to work for you and you get the feeling that they really don't know what they're doing, it's going to be terrible for them. First of all, you're not going to want to hire them, even if you try them out for a small job where you can't get much damage and you see that they can't do it, then that person is going to fail. Okay? So you really have to know what you're doing. Work ethic, by being here, I think all of you show me you've got a good work ethic, and you're serious, and I'm glad to see that. Thank you. Time management. If you're under the gun sometimes, you can work better. I know if I'm not really busy, I waste time. And I know it's not good. I'm at a point, probably doesn't matter much. But if I were trying to build a business, you can't waste time. Like you said, social media, you probably waste a lot of time if you don't know what you're doing. Okay? Talking, going after clients who may never work with you, going after customers who you have no shot of getting, who aren't interested in your business. That's how you can waste a lot of time too. I've done that over the years. And willingness to ask for input from others. We're going to talk about this later. You need help. Nobody can do it themselves. Believe me, nobody can do it themselves. I work in an office with 3 other CPAs, and we're constantly talking. What about this? And we're all very, very experienced, but we also want everybody's input. Very important. So starting a new business, there's 4 things, I think, 4 or 5 ways. You can start a new business from scratch, okay? That's kind of what I did when I started doing tax returns. It wasn't a big investment of time, money. If it failed, if I wasn't good at it, I didn't lose out too much. But if you want to start a new business, you got a lot of things you have to do, okay? And as you can see, nobody's holding you back. That's the good thing. You could do. You're in control at this point, okay? You choose the name, where you're going to do it, your markets, and what you want to do. You're in control. It's a great feeling. The problem is you're starting from scratch. Same thing, you know. It could become tough. And go back to that financial thing. Is it going to make money for you? You don't know at this point. So there is a risk there, but the reward can be great. That's the nice thing. The reward can be great. Okay, buying the business. You've got an established business. You have to get the right price. You have to pay the fair price for it. Somebody, and as a CPA, this is what we hear a lot. Somebody will come to you and say, listen, I'm going to buy this store. And he's showing $700,000 in revenue. Oh, that's good. But he's really making $1 million. I said, well, why is he only showing? Well, he's not telling the IRS about the other 300. And my first question to that person is, well, if he would lie to the IRS, why wouldn't he lie to you? Every accountant has this type of story, okay? You got to be very careful of who you're buying from, okay? It's good. If you're running a good business, it's somebody who's got a good track record and is just ready to retire, and they want the business to be successful after they retire, and they want the stream of income to come in, you're probably going to get a good deal, okay? You're probably buying from a good person. Unfortunately, you could be buying from somebody who's got a lot of issues. And it could be there's hidden liabilities. He may be sued or is potentially going to get sued, okay? And you have to worry about that. The inventory might not be any good, and you're going to wind up writing off a lot of inventory. The assets may be obsolete. You're going to have to buy a lot of new assets, okay? One thing that I always talk about is sales tax. What if an auditor comes into your business and says, listen, this old guy who owned the business hasn't been collecting sales tax, and now you owe it. What do you mean I owe it? It's your business. You got to pay the sales tax. It's $50,000 we want. Oh, no. So that's one of the disadvantages. When you decide to buy a business, do a lot of due diligence, okay? That means go in, hire professionals, and look at the business and what is it really like? What is it really worth? Are there hidden debts out there? Is there a potential that you're going to lose a lot of money? Something you had nothing to do with. Okay? Very, very important. Franchises. Has anybody thought about a franchise? What was your experience?
I thought about it, but then it was just a little too complicated for me.
Okay.
So I decided to
Pass on it.
on it.
Very good. A franchise could be good. I was reading this morning about Boston Market is having all kinds of problems and they're closing up, which I thought was a really good franchise. They've been around a long time. And I thought McDonald's had bought a lot of them. But it shows how even an established franchise with a good reputation can have problems. And from what I understand, a lot of the problems are at the corporate level and they're filtering down to the stores. Okay, so you never know what can happen. Some franchises are very good. You've got training, you've got somebody backing you up. It's going to be expensive. You're paying for all of those things. But again, you lose control. It's expensive. You may not be able to expand the way you want. There's a lot of disadvantages, but it's something worth looking into, especially if you're experienced in the business, if you're in the restaurant business and you don't maybe have the wherewithal to start something from scratch, but you want to stay in the business, that's the way to go. Again, you really got to do due diligence. Home-based business. This one I know about because that's what I had. I used to do tax returns in my basement. People would come in and it was convenient. I'd come home from work, have dinner and go downstairs and a client would come. It wasn't expensive because I had internet service. Okay, so I didn't have to get internet service. I already had it. It was flexible. I worked nights and weekends. And they talk about tax advantages. This is one that really doesn't happen. It could, or maybe not. Let me explain, because this question comes up very often. If you own a home and you use part of it for your business, can you deduct part of that house? Yes, you can. You depreciate it. The bad thing is, if you were to sell the house later on and your residence, there is a big benefit because when you sell your home, you get a $500,000 if you're married, $250,000 if you're single, exemption on the gain. So by creating part of your house as a business, it's no longer your residence. So if you sold the house at a gain, that portion of the house that's business wouldn't qualify and you would wind up paying capital gains tax. Okay, so that's why I bring that one up. However, if you were renting and you said, well, I'm going to use 1/5 of my home for business, that would be fine. You'd have no problem there. Okay, because one of the, at the bottom, disadvantaged IRS scrutiny, I wouldn't be too concerned about that. Do it right, talk to your accountant. Okay, but it can work out. There are some things, zoning. Some businesses, you really don't have a problem, okay, depending on what you're going to do. If you're in the middle of if you want to start an auto repair shop in the middle of a residential neighborhood, you're probably going to have a problem, okay? But if you want to be a business consultant in your home, occasionally see a person, I wouldn't worry about that. You are isolated. If you don't mind working by yourself, okay, it's not a problem. I used to work with a guy who did tax returns. He didn't like people. And good friend of mine, but he would prefer that they would send him the work, he would do the tax returns, and he'd have to deal with people. And it worked out fine. So the isolation was a good one for him.
I have a question.
Yes.
So in order to use deductions if you're working in the basement
Yes.
house, how much do you have to be making in order to even consider?
That's the thing. That's why I'm talking about this. If you're making a profit, okay, you can get deductions. It's a percentage of the house, okay, over many years. So you would deduct it, say, over 40 years. You're getting a really small deduction. That's why I don't think it's worth doing. If you're renting and you take 20% of your rent, I have a lady who lives in Manhattan, and I forget what her rent is, but it gives her like an $8,000 tax deduction. And she doesn't have to worry if she sells the house because she doesn't own it. So it works out for her. And it's all legit. It's got to be used exclusively for business. And nobody's going to come to your house and see what it looks like. But if you basically say, yeah, I'm running a business, I'm making a lot of money, and I'm using this one room, nobody's going to question it. Yes.
Would it be weird if you it's your residential property, but you rent the whole house to your business?
You could do that. But on the other side, you've got to declare the rent. So it might not be worth it. There are ways of doing that. Again, that's something an accountant could help you with. We're going to talk about using people. But yes, that is a strategy to get around certain rules, okay, and get some tax benefits. People do things like that. Okay, everybody understand that? You own a property, rent it to your business. That's a sophisticated strategy that you would have to discuss with a tax expert.
You'd have to be making quite a bit on your business.
Yeah, because if
any of this in effect, right? I mean, we're not talking $1,000 a year.
No, you've got to have substantial income to deduct. Otherwise, the deductions go to waste, really. And again, that exemption for selling your property, that $500,000 if you're married, okay, that's a big, big benefit. You don't want to jeopardize that, okay? That's big. So you don't make any of these decisions until you speak to a tax expert. Okay. Nonprofits. This is a really specialized area. I don't handle nonprofits. I know some people who do. They're specialists in this. But what I do know is that you get a lot of protection for your directors and people like that, your employees. You can pay salaries. You do run it like a business, okay? You can get grants from the government, and that's a biggie. Okay? So if you're providing a service, say in your community, and you go to the city and various departments within the city, you can get a lot of funding. Okay, SCORE is a nonprofit. We get some money from Small Business Administration. We also occasionally get some money from city council or somebody like that. Not a lot, but we just get enough to get by. Okay, but if you're running a real nonprofit, we're providing a lot of services, like to homeless people or people with physical limitations or drug addiction or something like that. You could get a lot of money because you're really helping out a lot. And people find this to be very, very rewarding personally.
Can I just make a
Yes,
stat,
please.
a data point? Last I checked, there were 1.5 million 501c3s in the United States. So there's a lot of them. I think there's 2,000 on Staten Island alone. So there are a lot. I actually am mentoring one or two people over the time that have created, and one still has a nonprofit. So.
And there are some benefits, like if you're a 501c3 charitable, you wouldn't pay sales tax on a lot of your purchases. I see that when I work with tax clients on an audit. First thing we do is get an exemption form. So that company, the nonprofit, when they make purchases, they don't have to pay sales tax. Okay, that's one of the advantages you get too. Okay, but you really have to be into this. You really have to know what you're doing. You can't just go out and start saying, I'm going to help, all these people without having a background. That's very important. When we talked about education prior, this is really, a lot of people are depending on you when you do a 501c3. You really got to know what you're doing. And an online business. This, again, lower startup cost. Is anybody doing anything where they have strictly an online business? No. Okay. Yes.
Well, my services is similar to these services. I do online training, and I partner with different companies to provide other services like funding. I sell my books on there. I book speaking engagements, and I do everything basically online because I work from home. But when I have meetings and events, conferences and stuff, I rent out the space. So 90% of my business is online.
Oh, good.
And that's how I started.
Thank you. Okay. Again, not a lot of capital to get into it. You get a computer, get a website, start doing it like that. There is a lot of competition probably. Okay. And again, what they talk about visitor expectations. People, if they hit your website and they're not impressed the first time, they're probably never going to come back. That's the tough part about this. But you could do really well. And again, expanded geographic reach. That's what I like. I do tax returns, and I'm not an online business, but using technology, which took me a while to learn, I have clients, I've had them all over the world. I do have a lot of clients like in Florida and different places around the country, only because of the technology online. I wouldn't consider myself an online business, but I'm using the technology. But I think any of you looking to start a business or continue it really has to know this stuff and get help. And especially because you need to make sure that nobody's going to attack your business, cyber theft or anything like that, or cyber attacks. Okay, we do that as CPAs. We have to have this in place. Okay, but you too have to have this.
There's no shortage of applications out there too, Shopify, Etsy, eBay, right? So do your due diligence because they have terms and conditions, things you have to honor, return policies, shipping, and all of those things. So it's important to understand the platform of choice and does it meet your needs.
Right. One of the things, again, I do deal with in sales tax is companies will come to me and say, well, I want to use one of these platforms. From a sales tax perspective, what do I need to know? Well, we have to know who is collecting the sales tax for your sale and turning it over. So if you're using one of these market people, okay, you have to be assured that they're collecting the tax and they're turning it over. Have them confirm that to you. Okay, so that's one of the things that I deal with occasionally. Because you don't want somebody taking advantage of you. That's the other thing, taking a big commission on your sales that you don't expect, anything like that. So really, again, the due diligence up front. How are we doing time-wise? Oh, we got some. These are all important things. Self-starter, can you see all of these things up here? Good, good. Things we've all talked about. I think having support family at the bottom, probably maybe closer to the top, right? It really helps that you've got people that could help you and that people are behind you, they take you seriously. That's another thing. And they're willing to help you. All of these traits, persistent, decisive, I think all of you, I'm sure, have this. Okay, but that last one, support a family, you can't do it yourself. You always need people to help you out. Okay, oh, how many hats will you wear? Good boss. Okay, you need, if you're going to do everything on the first day, you probably could. You set yourself up, you've got your computer, you're going to do some simple accounting, that's probably enough when you get started in your marketing. But as you grow, it's going to get more involved. You have to anticipate that. Okay, that's where we talk about a business plan. I think we're going to talk about that a little later on. Strategy. Again, this is the business plan. SCORE has some excellent resources on our website. Have any of you visited the SCORE website? Okay. Have you seen the webcasts that are on there? Okay. Some really, you think it's good? I watch a lot of them myself. So I know what I can tell people if I'm mentoring them. Okay. I learn a lot. Even though I know a lot, because I'm old, I've learned a lot. You do learn a lot of good stuff on there. Webcasts are excellent. There's one on writing a business plan, which I got the email. I signed up for it. I just haven't had a chance to watch it, but I'm going to do that. That would include the strategies. Okay, all of these things. Product. How are you going to do it? Okay. How am I going to go about doing this? If I'm selling my company, and think about it. If you're going to go to a banker, say, make that your target. You know, look at all these things. If I'm going to go to a banker eventually and get a loan, how do I sell my company to this banker who knows nothing about me? Okay, this is how you focus. I always use that word focus. With your idea, get it on paper so you could explain it to someone else. Very important to do. You could talk about it, but once you get it on paper and it helps you to decide really what do I want to do here? It's a great experience. Go in on the website and do that business plan. Okay, even if you're early in the stage, do the business plan. Get it out there. It's a one-page thing, but it will help you focus on what you want to do.
That's on the SCORE website?
It's on SCORE website, score.org. You'll find it.
Thank you.
Okay. Sales. This is tough. You've all done this, I'm sure. Bids. I find that figuring out what you're going to charge is a tough one. What is your product or service worth? I know accountants always have this one. This is a tough one. You know, if somebody, in fact, I heard of an accounting story not too long ago where somebody knew the answer, client called up, guy knew the answer, only because he had spent a lot of time working on another client who had a similar problem. So instead of saying, well, let me get back to you, I got to do some research, and he could have billed it for the time, which was a very valuable answer. He gave him an answer on the phone, and he couldn't bill for it. So even in 5 minutes, because you've got those skills, you've done all that work. So basically, you're charging one client, and then the second client's getting it for free. You don't want to give away your services. That's another thing. Okay, there are people And you're going to find this out as you go along. Who you don't want as clients or customers. Avoid those people. They will drag you down. I'm serious. They will drag you down. They're people who want your services for nothing. Okay? So when you go out there, find the people that really want you and respect you and will pay you. Okay? Because I've seen this again over the years. There were people who will take advantage. That's all they want to do is take advantage of you. So be careful who you're selling to. Know your customer. This is a good one. This is a tough one for me because I don't know what you do. You know this better than I do. And this is where, again, I get back to that business plan. It helps you to focus. Who's my customer? Well, they willing to pay? Can I service them? Going forward, are they a good customer? Or is it going to be a one-time thing? I've had one-time customers, clients, very nice. It worked out. Once, many years ago, I had a couple who was moving out of New York and they needed a tax return done. And I started doing it on computer back then. It was very early in the computer age. They called me up, said, we heard you could do a tax return while we wait. I said, yes. They showed up. I did their tax return. They paid me. I never heard from them again. And it was fine. Sometimes you'll get those opportunities, a one-time thing. That's fine too. But you also want to know who's going to be the ones that give you more business going forward too. Okay. Location, location, location. Again, you're going to know this better than anything I could tell you. I'm sure you've all thought about this. Where am I going to do it? I'm not even going to get into it because there's just too many things to talk about. I think you know this best and you've given it a lot of thought. Again, part of that business plan. Again, marketing part, branding. Has anybody done branding themselves where they say, I'm going to be this person and I'm going to do, you have, right, with your organization.
Yes.
Mm-hmm.
So when I first started, like my favorite color is purple. But when I first started my business a long time ago, I wanted my business colors to be different from my personal favorite colors. So I had, I believe it's burgundy and black. Burgundy, black and white. I had the website out and I'm showing people and it wasn't drawing any attention. And then my service, my brand is for women, entrepreneurs who work from home. But I had men message me and say, that don't look like you. That don't look like your brand. That don't seem like your personality. I was like, because it's not about me. But then I had women say the same thing. So I was like, okay, I'm going to try something and I'm going to make it purple. And I turned it to purple. And then I had all these women following, messaging me, email, joining. Oh, how can I join? How can I be a part? So what I learned is when you're in business, when you first starting out, you brand yourself into your business because people are going to be attracted to you before they become attracted to your business. I used to hide behind the logo. I didn't want nobody to see me. I wasn't speaking anywhere. And then once I started speaking, I started seeing business pick up because people seeing who was behind the brand. And because of purple, everywhere I go, people used to ask me, why you don't have on anything purple? Because I didn't wear purple. I just love the color. So I started having a hint of purple everywhere I go, even if it's my nail polish, right? So I became my brand. And then when you're out and about, it's like you see people in suits all the time, or if someone's plumbing, you're not expecting them to be in a suit because they're carrying their brand on them. That's how they walk. That's part of their brand. I don't wear suits. I wear, casual business attire, and that's my brand. So if I came into a meeting with sneakers on, somebody that knows my brand will be like, that's different because I created a brand of myself. So you have to brand yourself as you're branding your business because although people try to separate themselves from their business, it's all together. So when somebody look at your business, when they see you, they're going to expect for it to make a whole lot of sense.
It's true. I know, an accountant, nobody expects an accountant to show up in a sweatshirt and jeans, right? When you go to their office. We all,
Throw you off.
it's gonna throw you off, and you're gonna lose confidence. Is this person serious? That's what they would say. Is this person really serious about this? Very important. Next. Hey, I talked about this pricing. This is tough. Setting the right price is tough, okay? And really, you've got to make sure that when you set those prices, obviously, there's competition out there, perhaps, of you can't sell the same ice cream cone for 3 times what somebody else is selling it. It's not going to work, okay? But if you're a really fancy restaurant, you could sell that chicken dinner for maybe twice what the guy around the corner who's got a really very casual place. So you got to take this all into consideration. What is the competition? What is it costing you? Okay, what is your overhead that you've got to cover? That's another biggie. Okay, if you've got a very expensive property and you've got to meet the rent or the mortgage payment, you got to charge more. And people will pay for that too. If they see something really classy, they'll pay for it. They know they're getting value. Competition. Tough. I talked about competition earlier. My competition was people doing their own tax returns. But there's all kinds of competition that's based on price, personal reputation. Again, if you're really good at what you do, that's probably something that will set you apart from your competition. You follow up with good service. I've heard complaints from people over the years that they didn't like their accountants because when there was an issue, their accountant, they would call up and leave a message and say, I got a notice, what do I do? And they wouldn't hear back from the accountant. That always bothered me a lot. If I have a client that calls me and says, hey, I got a notice, I'm getting audited, or they said I owe more money or something like that, I take it very, very seriously. Because if I made a mistake, I could fix it, okay? But I got to own up to it. And people respect you if you stand behind your work. That's one thing I could say. People respect you if you stand behind your work. And that's part of the competition. If you're there and they know you're there, that's a biggie. This is a part I wanted to talk about because I could really know a lot here. And hit me with questions too. There's 5 different ways that you could set up your business. A sole practitioner. I'm a sole practitioner. I'm not incorporated. I send out bills. They send me a check or they Zelle the money into my account. I don't even have a separate bank account because I know what's going in, okay? Many of you would set up a sole, if you're doing work where there's no chance of, say, getting sued, okay? And there's no, you don't have to go out and borrow. If you're doing, say, a consulting business and there's really no chance of anything going wrong, okay? A sole proprietorship might work out very well, okay? So you're basically an unincorporated person. You can always get sued. Somebody can, I'm going to state it, even for all of these things, somebody could sue you, okay? Would they win or not, that's the thing. If you're a sole proprietorship, you may want to get insurance for, say, I hate the word malpractice insurance, but that's what it is, okay? In my business, there's very little that I could get sued for because I'm not a surgeon, okay? I don't do anything that's risky, okay? If I make a mistake, I file an amended return to correct it, okay? But I do have malpractice insurance only to cover me because I don't know what could happen. And you may want to consider that. A partnership is an agreement among 2 or more people who agree to run a business and somehow share in the profits and in the way that they decide that they're going to. Has anybody been in a partnership? Okay. How'd it work out?
That was fine for us.
Good, good. Okay. Partnership is pretty simple. The tax return, you need to file a partnership tax return. That's the way it works. And in the sole proprietorship, you just file one form. It's called a Schedule C. You list your revenue, you list your expenses. The profit goes onto your tax return. Very, very simple. A partnership has to file a tax return, okay? But the partnership does not pay tax. The portion of the income for each partner goes on their personal tax return, okay? So it's fairly simple. You have to file a partnership return, so that's a little costly, okay? But there's no what we call double taxation. The partnership's not paying a tax, it's just flowing through, so only one party's paying tax on the profit. A limited liability company, this is called an LLC. You've heard that term many times, I'm sure. It's a corporation that has a limited number of members. Could be a big corporation, okay? But it's a limited number of members. And what we often see is what we call a disregarded entity. A person will set up an LLC to protect themselves, okay, against getting sued. So say you're a contractor, all right? And it's dangerous kind of work. You could get sued. Somebody could get hurt. You set up an LLC so they can't sue you personally, all right? So only the assets of the business are subject to tax. I'm subject to an insurance claim or lawsuit. It's very simple. Once you've set it up, it's very simple because an LLC, a single member LLC, which means one owner, okay, files a Schedule C. It's very, very simple, okay? A C corporation is what we call a big corporation. I worked for Con Edison. That was a C corporation. You have many, many, many shareholders, okay? It files a separate tax return. It could file in many states, files in the state of New York, files with the IRS, files in New York City. That's the big corporation. It doesn't have to be big. You could have also set one up yourself. You know, it could be a one person owns a C corporation. It gives you a little flexibility. You could sell stock to another person, or you could sell all the stock to another person, sell them the whole business. Makes it easy to transfer ownership if you wish to do that. But there's double taxation. So if you pay yourself a dividend in addition to salary, you have to pay tax on the dividend. But you could also arrange things so that most of the profit comes to you as salary. So you kind of avoid the double taxation. But when we talk about double taxation, we talk about, again, a major corporation will file, pay its taxes, and then when the shareholders receive dividends, they pay tax on their dividends. That's the double taxation. Does anybody, any questions on that?
Al, I just want to,
Yes.
on the LLC, the
Yes.
New York State requirement about
Yes.
doing the publications.
Yes.
Can you just talk-
Okay. When you set up an LLC, you can go online. There's one way of doing it. You could go to an attorney. They could help you do it. You could also go to a CPA, and they usually have services that they can help you do this with. Okay, there's a number of ways of doing it. I don't do it personally. I've never done it for anybody, but I've spoken to other accountants who've done it. And there are what they call publications. You sometimes have to publish in the newspaper the fact that you have this new corporation. Okay, it's like a public notice. And a lot of companies, what they do, will publish it in some obscure newspaper somewhere in New York State. Right? You're not going to publish it in the New York Times because it's going to be too expensive, but you'll publish it in some tiny town, maybe in Watertown, New York, where it should cost you $25 to run an ad. Okay, so these companies do it very cheap, as long as it's done within New York State. Okay, yes.
I wanted to say something about that.
Yeah.
Like, so what I did do a service that I'm partnered with, and they have, for New York State, my registered agent is in Albany, and they did the publications up there. And you have to publish in a monthly publication, a weekly publication, and a daily publication. Right. So they do it all for you. So that you don't have to look for. Good. You know, you have to, it's certain papers that are the state approved. So us doing it ourselves, it could be complicated.
You don't want to do it.
Someone if you find like an account or someone who knows which publications, it'll
Right.
save you time and money. Because
It will.
it can get really, really expensive.
Absolutely. I was talking
Especially in
to,
New York City.
right, my colleagues in my office who, I think they have a service that charges them maybe $500 to do
Yeah, I've
it.
seen it as low
Yeah.
as $3.95.
And they charge a fee, probably an hourly for an hour's work of getting it arranged for you. So you can get it done for less than $1,000, okay? But it can be a pain in the neck. An S corporation is strictly a tax concept, okay? You take a C corporation and you apply to become an S corporation. All it does is means that the C corporation is being taxed in the same manner as a partnership. Okay, that's all it is. So if you own the C corporation, you basically file it and all the income goes to the shareholders directly. That's all it is. It's strictly a tax concept. However, New York City does not recognize S corporations, strangely. So if you have a C corp, an S corp, you still have to file a regular corporation tax return in New York City. What I do want to stress to you, very important, if you go through this, talk to your accountant ahead of time. Do not show up in April and said, I set up a C corporation last year and we were already operating. And they're going to say, did you file an extension for your C corporation because the return was due March 15th? And you're going to say, no, I'm here for my April 15th filing. You mean I had a file back in March? Do this ahead of time. You may need to make, if you're profitable, you may have to make estimated tax payments, hopefully. Okay? Do this as soon as you set up this corporation, inform your accountant or whoever's going to prepare your taxes. Okay? Do not leave this as a surprise. Very, very important, please. Okay? Again, the sole proprietorship, these are all very simple. Make it as simple as possible for you. Again, I never incorporated, I'm a sole proprietorship. It's worked for me. Yes,
I have a question. Since you're a sole proprietorship, for instance, if you're like a W-2 worker and then you have a sole proprietorship on the side for your side businesses and stuff like that, how many can you have?
you could have unlimited amounts.
It doesn't, like, you don't have, it wouldn't say like you have 40 hours for your W-2 job and then like how could you have 1,000 sole proprietorships?
Not really, no. You could have lots of things. Okay, what's going to cost you is the preparation of the tax returns. You don't want that. You want to keep the cost down. That's why we tell people, don't go around setting up all kinds of corporations. Every time you decide, well, I'm going to do a little new business, okay? Let me set up a new corporation, because it's going to cost you. It's going to cost you maybe $600-700 to have a simple corporation tax done, okay? And then there's filings. And then the other thing you got to think about is, and again, I said, as soon as you set this up, talk to your accountant. Sales tax. You may want to be registered for sales tax purposes, whether you're collecting it or not. Okay, because the state may come along and see that you're a business. Are you filing sales tax returns? Okay, there's always an advantage to registering and filing a return. And that's what we call the statute of limitations. Once you file a tax return, it's on record. They have 3 years to audit you. So you can never have, after you've been in business for 8 years, the state coming along and saying, hey, where's your sales tax returns? Okay? Even if you have nothing to report, as long as you file a return, which is very simple, it could take 10 minutes online. They make it very easy. The statute of limitation is running. So they can't go back more than 3 years to audit you. And that, again, that's something you have to work out with your accountant. Make sure everything is filed. And it's a funny thing because when a business, say, has difficulty or needs something from the IRS, the first thing they want to know is, are you in compliance? Are all your returns filed? Especially with individuals. Are all your returns filed? And if you have issues where you can't pay them and you need a payment plan, and if you tell them, yes, we are in compliance, all returns have been filed, they'll say, okay, let's talk. So it's very important that you get those things done. Any other questions on those tax filings?
Was it always 3 years or was it used to be 7 years?
It's 3 years, 7 in the case of fraud,
Okay.
okay? And New Jersey's 4 years. We hate that. 3 years for federal and New York. Okay, they can't go, but you have to file. If you've never filed, they could go back forever.
Okay.
Okay, and you don't want that. That's why it's cheaper in the long run to file once a year, okay, and report nothing. As long as you're filed, you're done. Okay? Insurance, this is a biggie. Depending on the type of business that you have. I was always in my house, and then I went to a smaller house. I decided to go to an office, and the office said, okay, but you have to have an insurance policy if somebody walks in and gets trips and falls. First time I ever had insurance for my business. Okay, nobody ever tripped or fell, fortunately, but you may have to get property insurance, depending again on the business. Liability, I mentioned, somebody could sue you. Okay, even if you're a corporation, that doesn't mean they can't sue you personally. People do that. You're driving your car. Okay, if you're on business purposes. Umbrella liability, that kind of covers everything. Workers' comp, when you hire employees, you may need to get workers' comp. Health insurance, this is the one I mentioned earlier. If you've got a job and you decide to go into business and you're leaving your job, are you going to have health insurance? Can you get it from your old employer by paying COBRA? Okay, life insurance, this is very important, life insurance, especially if you have a partnership. Partnerships often take out insurance policies on the other partners. So if one of them dies, okay, they take the money, the proceeds, and they could buy the other partner's share of the business, say, from the deceased spouse, okay? So life insurance comes in, and business interruption, that's a biggie, especially in the last 3 years with the pandemic. If your business can't work, what if you have a shop and there's gas main explodes outside your business and nobody can get in your store? That would fall under business interruption. Develop a relationship with a reliable insurance agent. It's a very good thing to know. Know someone who understands what you're trying to do. Licenses. Okay. Again, government regulations. I don't really have to go through. You all understand these things. Again, you need people. You may need an attorney for the licenses, labor laws, immigration laws, IRS. This is where the accountant comes in. You want to tell them ahead of time. Do these things ahead of time, especially the business licenses. Again, the city inspectors. That's the one that drives business owners crazy. And they show up at the worst time. The sanitation ones are really tough. People who told me they have stores, guys, or gentlemen who owned an insurance office, the little sign that he put outside, it wasn't close enough to the building, and he got a citation. A little, one of those A signs, come here. And so there's all kinds of crazy stuff you really got to know about.
So, there's the New York City Business Wizard that you ask a series of questions and it will let you know for New York City specifically what licenses and other permits are needed for specific business.
Okay, team. This is what I want to stress to you. You need these people, okay? Maybe I'm a little prejudiced, but the one in the middle, the accountant, is probably the key one for you, okay? Because the accountants are good because they know other people too. There's always a network and they can help you out. Accountants know other accountants. They might know somebody who's a better accountant for you and say, I can't help you, but this guy would be perfect for your business, okay? The banker, we have these bankers here. We at the CPA Society in Staten Island, we try to cultivate relationships with all the banks out here because we can always recommend those. We know these people. We try to get them to understand what we're doing, and they can help our clients, and they can help you. Find a banker that you can work with, okay? That's why we had people here today. These are good people. You need to help them. They're going to help you. A lawyer, get a lawyer who understands business. Okay. And if you have a particular type of business, You may need somebody who's good with patents, somebody who is good with real estate. But they make sure they know the subject matter. Again, I mentioned the insurance agent and business mentor. That could be SCORE. Or somebody else who you know that's been in your business and you're comfortable with, but SCORE does it. They're the mentor, and we want to help you. But also, when your business grows, the Chamber of Commerce, our host today. All these people are very valuable people. Funding and cash management. Okay, I already told you, I think earlier on about a lot of this. You need the capital to get you through that first year. Okay. Do a cash flow projection. How much am I going to need? And how much is the business going to need? And how much am I going to need to live on too? Very important. Can you cut back? Are you wasting money anywhere? Is there debt that has to be paid? Okay, if you're taking money from your home, if you're borrowing and taking on debt, you got to make sure you could pay it back. Okay, you don't want to go into, how much you have in savings. Do you have to go into your savings possibly? That's not such a bad thing if you think you're going to be successful. How long is it going to take? And again, there's 6 to 12 months of covering expenses. Do the cash flow projection. Lay it out month by month and say, what do I expect to earn? What am I going to pay? What is the rent on the office that I'm going to hire? The telephone bill, all these miscellaneous things, the insurance, okay? Anything else that I have to pay for. Again, the business plan where you focus all of this, the cash flow projection, it's going to really crystallize everything for you. Any questions so far on that? Okay, thank you. This is what you're going to need. Startup. Sometimes it's not a lot. Office equipment, a computer, a telephone. You have to fix up the office. Licenses, professional fees. These, depending on your business, if you're just doing a service business, these might not be a lot. Okay? Maybe the office might be the most, if you're even going to get an office. But again, there's your cash flow projection. Work that out. Okay, salaries. I mentioned rent. I mentioned insurance, taxes. Talk to your accountant again about taxes. I tell people who are doing well with their business when they're starting out, put 40% of your profit aside for taxes. 40%. So if you're going to have a $100,000 profit, $40,000 aside because you're going to pay federal tax, you're going to pay state and city tax, and the one that's unexpected, self-employment tax. You know what self-employment tax is? Very important. This is roughly 13% of your profit. How many of you have had a job where they withheld Social Security tax? Okay. And your employer matched that, okay? So it was basically around 14% that the government was getting of your salary, half from you, half from your employer, okay? Now you're the employer, so you have to match that part. So there's 13% right off the top. That's why I tell people, put 40% aside for taxes. Okay, and we do these projections for self-employed people. If somebody comes to me and they're earning $400,000 as a self-employed person, there's a lot of tax there to be paid. So I make sure that they've got enough money put aside. And after deductions, it comes out, you may want to make a payment to a retirement plan, because you could do that then. If you're really doing well, you could set up a retirement plan for yourself. And that's a nice big tax deduction. But you have to do this ahead of time. Talk to the accountant. If you're making money, have that conversation. You may need to make estimated payments. Estimated payments are quarterly payments that you make throughout the year based on your profit for the prior 3 months. Okay, it's important. You don't have to make it, but if you don't, and it turns out that you owe $60,000 when you file your tax return, you're going to get a big bill for a penalty, an underpayment penalty, which is essentially interest. Okay, but it could be, especially with interest rates going up, it gets more and more. So accountants are telling their clients, make sure you make estimated payments because these underpayment penalties are a lot of money. Okay, have that conversation. Okay, but that's a biggie, right? Sources of capital, if you're fortunate enough to have the money in the bank, that's great. You can borrow. Partners contribute, those who have partnerships. You retain money in the business. Okay. Debt, you could go out and usually borrow. The SBA, Small Business Administration, who funds SCORE, there's a lot of assets there that you can tap into. We have a lot of existing relationships with banks, and they can help you fund your business. Again, these webinars, we had several of them on how to go out and borrow money and sources of money. You got to go to that SCORE website and look this stuff look over. There's a lot of good material out there. Okay? When you go for a loan, again, we get back to can't stress enough, the cash flow projections and that business plan. When you go for a loan to a banker, the first thing that they're going to think is this a viable business? And does this person know what he or she is doing? Am I going to get my money back if I lend this person money? And this is what you have to look at. How much risk are you putting in yourself? Would you want to perhaps mortgage your home to do this? Okay. Do you have the financial wherewithal? Do you have a nice cash flow showing already and you want to expand the business, but you need the cash? I once did this many, many years ago when I bought my first computer. I went to a bank and said, I want to buy a computer so I could do tax returns. And my theory is I could do a lot more returns faster and increase my revenue. So I want to buy this computer, which at that time was like about $2,500, a big investment back then. And nobody would lend me money. They say, no, it's too risky. But okay. So I went back to another bank and said, listen, I'd like to borrow this money because I want to put it in an IRA for myself. I want to open an IRA and I'll open it at your bank. They said, okay, here's the money. So depending on how you frame this thing, you could get money, okay? But if you show that you know what you're doing and you've got some experience and you're showing profits especially, okay, in a good market and all, and you impress these people, you'll likely get some money. Cash is king. Okay, open a separate bank account. Yeah, for most people, I would say that's a good idea. I didn't need to, but I'm an accountant, so I know what I'm doing about that. And I didn't have the kind of thing, I don't sales tax. I didn't have to think. Mine was very, very simple. And I was able to identify because I didn't have that much volume. Okay, so, but for most people, I would definitely say open a separate account. Petty cash, keep a little cash aside to pay for things. There's always little things you got to pay cash. But keep records of that too. Sales tax. This is a biggie. When you collect the sales tax, that's not your money. You're a trustee. You have to turn it over to the government. Okay. Put that money aside. Do not use that money to fund your operations, please. That's how many businesses get in trouble. Make sure you know how much cash is in the account. Reconcile it. Nowadays, you can go online, look at your bank account every day, see how much is there. You know what you have outstanding. You know exactly what you have in the bank. In the old days, you'd have to wait to get the bank statement, and people sit down and look at all the checks. Things have changed so much for the better. Okay. There's an assessment here that you can look at, and I think we've sent it to everybody. There's this checklist where you go from 1 to 5. Is that part of what we sent to everybody?
I'm not sure.
I don't think I got that.
Okay.
Do we have your email
We're going to
address?
send you everything, but we have an assessment that lists, it's like a questionnaire, psychological questionnaire. You put 0 to 5, okay?
The next slide.
Oh, there we are. Okay, thank you. So you do have it. Okay. This is pretty good. I was going through this myself, and as a SCORE mentor, sometimes the best advice we give people is to tell them, no, you shouldn't start a business. And we're really giving them a good service sometimes when we do that. If they're not prepared, and they really don't understand the business, we could save them a lot of money, okay? Because it's going to be very costly for these people. So one of the options here is no, this is a no-go, okay? For most people, yes, yeah, go for it. But occasionally we have to tell people this isn't such a good idea. Basics, again, this covers a lot of what we've discussed today. Any questions at this point? I know we've thrown a lot at you.
I wanted to ask about the receipts and keeping track for, I guess, taxes. Do you have any recommendations for software or anything like that?
I think a lot of companies use QuickBooks. That's, from what I'm hearing, that's very good. I have clients that can run reports very easily. So QuickBooks, and there's different versions of these. Some are very simple. I mean, you can even do it on an Excel spreadsheet.
Right, but then you would have to keep like the physical receipts, right? Because if they start like fading out, and I'm just wondering how am I going to keep track of all these receipts?
You mean, what kind of receipts?
Scanned it.
Didn't scan them. Just they're like all like gas receipts or anything for.
People, if they're on a credit card,
Would that suffice for?
sure, that suffice. That's good. All those receipts are good. I have a client I'm working with. They throw away their invoices. They pay them and then they throw them away. And these are very, very large invoices, and it's driving me crazy on the audit. And they know they shouldn't be doing this. Why would you throw invoices? Especially nowadays, you can scan things very easily. So you got to use the technology too.
I also know a lot of the applications will download the
Yeah,
data
that too.
into QuickBooks,
Right,
right? So
right.
QuickBooks has a lot of interaction, can interact with a lot of different systems, eliminating data rekeying.
There are people who are QuickBooks experts, and they do this. That's all they do is bookkeeping. And it might be worthwhile if you've got a lot of activity, getting somebody like that to be your bookkeeper. It could be very, very efficient. Yes.
Or offer a service where they help people that just start a business set up their bookkeeping.
I don't believe we do that.
I think though there are.
We'll guide you to get somebody, right?
Right, or to show you how to use
Right.
QuickBooks, like they'll do, tutorials
Things
like that.
We don't do your work,
Right,
okay? We don't do your work. We mentor you. We'll help you find people that can do it for you. But we don't do your work.
I'm reluctant to push you in one direction
Right.
or another, it's.
If somebody asks me for an accounting recommendation, I need an accountant, I will give them a minimum of 3 people. If they ask me for a bank, I'll give them a minimum of 3 banks. Okay, we want to be very objective here. We'll find people who qualify, but you make the choice. Okay, we don't want to influence you in any way. We want to help you. I think we've covered everything.
Yeah, this is just with the business.
Right.
So there's 2 business plans out there. There's a really large one, which I believe that detail is ultimately needed. But there's also one that it's a sort of a one-page starter. I think that's perfect for somebody who's really not sure, just starting out. But if you really ever going to want money or really have an investor or a bank, you're going to need the full-blown business plan that goes into a lot of detail.
Right.
The business plan is really, I counsel people, it could be for your eyes only as well, like, because you're not going for funding, you're not going for a partnership or something like that. It's a good document for yourself to keep you focused.
Focus,
right?
that's the word I use, focused. You really need that. I know when I'm not that busy in my work, I'm semi-retired, so I waste time. And it's not a good thing, and I get guilty about it. But that's what happens sometimes. But if you're focused, and you all need to be, it's very helpful, and that's what those business plans do. You want to target in on the important stuff. Okay. I think we're about done.
Right, the only thing is, this is session one of a 5-step,
Right.
right, program that you would go online. I'm just get to the beginning to show you that this was only session one, right? And there's a lot of information, but to really build your plan, you could, these are all online and viewable.
The stuff that's on there, online, I know is setting up a business. Again, what I covered, with the LLC, the partnership, things like that. There's one on taxes that's very important. And again, I know we go through it quickly here, but it covers the estimated payments, the self-employment tax, and what to expect. There's the business plan. There's some really good stuff. Insurance is an excellent one on business insurance. Look for these things, okay? And get in touch with SCORE. If you're having trouble, get on our website, Staten Island SCORE, and get one of the mentors to help you. Okay? But there's excellent resources. If you sign up for a webinar, when you get on the mailing list, you're going to get these emails. If you sign up, but you can't make it, sign up. They will send you the recording, and you can watch it at your convenience. I do that a lot. I sign up for these things, and then when I'm sitting, doing whatever I'm doing, and I listen in. It's very convenient. Do it at your convenience. I know a lot of people are very busy. You go at all these things. I can't stop at 1 in the afternoon to watch a webinar. But if you can watch it at 7 at night, it's a lot easier. So take advantage of those things. Yes.
I have one more question, Madam.
Yes, please.
I was wondering, for like, when you're setting up, for instance, an LLC, you have an LLC, but what are the difference with you just going online and registering for your own EIN number?
Okay, that's pretty easy. They're going to ask you, though, when you set up, you go online, the irs.gov, and you get an EIN. That's an employee identification number. They're going to ask you, what kind of business are you? Are you a sole proprietor? Are you an LLC? So you set those things up first, and then you get the EIN, the employer identification number.
So I've set up my EIN before for a separate business.
And how did you set it up?
I just went to the website and I just did it like that.
So
Like, does that qualify as like, it's not formed because there's no LLC behind it?
right.
So is that like do I still need to do anything after I get the EIN?
If you set up the LLC, you could probably use that EIN.
So right now, the EIN by itself is,
Use it as a sole proprietor
okay.
if you want to use it.
I see, okay.
You could use it as a sole proprietor. Or if you can't switch it to the LLC, get a new LLC. I mean, a new employer identification number under the new LLC.
Okay,
Okay?
thank you.
I have a really excellent Forbes article that goes step by step for setting up an LLC in New York, that we have your email address. We'll include that with this. I think it's very helpful. And it also it's specific to New York,
Okay.
right? Which is great because every state has different
Right.
rules and different laws. And it takes you through the setup and then what you have to do after you set up an LLC, right? There's organizational
Yeah,
things.
there's a form you have to file. I think it's $25. It's very simple. You file with the state every year. Okay? Some people forget to do it. There's no big deal. Do it later on. But that's why I say go to the accountant ahead of time. Do this in February, when they're getting ready. And it's very easy to do it online. But the timing is important. Let the accountant know well ahead of time what you're doing. I can't stress that enough.
My son has a small business. If I had to pick one professional, I would definitely pick an accountant. You know what I mean? Only because of the tax, and then they do know other
Right.
things about that maybe a lawyer would know,
That's
right?
right.
That you would go to a lawyer for. So I would,
I tell my clients when they start a business, we'll get EIN. EIN is your business social security number. So think about it, when you're having a baby, you don't get the social security number before you have the baby. So you birth the baby, then get the EIN number.
And what's the reason for the EIN number?
It's
it's like your social security number for the business.
For the business. Employee identification, you go right online, it takes 10 minutes to do it. But that's the number. And you could get it for a business, for a sole proprietorship too. So when you file your tax return, your return is under your social security number. But when you file Schedule C, which is the report for the business, it's under the employer identification number, just to keep the two things separate.
And it's free, but if somebody
Yeah.
charge you to do, if you paying a service, they're gonna charge you. They're not charging you for the EIN, they're charging you for their time.
Right.
A lot of people get that confused. If you ask me to do something that you can do for free, I am gonna charge you. So anytime somebody charge you for any of these things, that's free. Understand you're paying a service. fee.
Right.
You're not paying for the EIN.
Yeah, many things you could get on the IRS website.
Does anyone have any other questions? Okay, I'm going to send around a brief survey. It really helps us to improve what we've done today. And so if you wouldn't mind, just taking one, passing it down, and you don't have to put your name, put it anonymous, and, be truthful. We're here to help you, and any way we can improve, we want to do that, so.
You would. Probably not. I mean, as an accountant or as a mentor?
As a mentor.
Mentor.
I'm not ready for it.
Okay, possibly. Yeah, if you went on the website and chose me as a mentor,
Right.
that's how you would do it. There might be somebody out there that's better on the website. Staten Island person. Possibility.
Like,
Been around a while.
unless there's any doctors that are involved as mentors or people that were in the medical field.
There might be, that's what let me explain something about getting a mentor, how it's not always locally. I'm out there as a tax person, and I got a lady in Kentucky who I was mentoring, and she got my name because she just must have put in SCORE mentor tax, and my name came up. And apparently, I forget whoever it was, her friend had a business, and maybe the accountant died or something like that, and they were in a jam, and she needed help. How do I go about getting an accountant? What do I ask? What do I look for? And that was the kind of person that I helped out. It was like about 3 or 4 conversations, and I helped her a lot, but you never know how you're going to need help or where the help is going to come from. So you take advantage of these mentors. And if you have a special situation, there might be a mentor out there who really knows your business. That person could be out in Cleveland or down in Florida who really knows what you do better than anyone here maybe. So take advantage of SCORE. We are a national organization. Okay, so take advantage. There's great skill sets out there. It's not just accountants and there's marketing people, there's scientists. We have a lot of people who really know a lot of interesting stuff. So be very descriptive of what you need help with. And maybe you might need 2 mentors. Somebody for one thing, somebody for another. Take advantage. Thank you.